Get this feeling, this gut feeling that you're not seeing the whole picture? Like the big Wall Street players are playing a completely different game. Well, you're not wrong. And today, we're going to pull back the curtain on that game. We're going to dive deep and figure out how this smart money really operates so you can start spotting their moves. All right, let's look at HIMS right here. I mean, on the surface, this chart looks pretty ugly, right? It's a steeped drop that's basically screaming, sell, get out now. But what if that's exactly what they want you to think? What if this whole drop is just a clever setup? A way for the pros to shake out all the nervous retail traders and scoop up shares on the cheap before the real move happens? That's the million-dollar question we're tackling today. So here's how we're going to break it all down. First, we'll get into what the smart money game is all about. Then I'll show you a pro-level framework for analysis. After that, we'll use it to decode what's really happening with HIMS, follow the money to see where it leads, and finally, piece it all together into a high-probability trade idea. Let's get into it. Okay, first up, the smart money game. You gotta understand, the chart you see on your trading platform, that's just the tip of the iceberg. It's the show they put on for the public. The real action, the big market-moving trades, that all happens behind the scenes, in the shadows. And let's be real, this is the question that keeps a lot of traders up at night, isn't it? That fear that you're being played, that you're buying high right when the big institutions are secretly selling to you, or you're panic selling at the absolute bottom, right into their hands. Look, the goal here isn't to try and beat them at their own game. No way. The goal is to learn how to read their playbook, to see their footprints in the data and trade with them, not against them. So where does all this hidden action take place? The main arena is something called dark pools. Think of them as VIP trading rooms for the big institutions. They're private, they're anonymous, and they are completely off the public radar. And why do they use them? It's simple, really. If you want to buy or sell, say, 1 million shares of a stock, you can't just do that on the open market without sending the price flying and showing everyone your cards. Dark pools let them move these massive blocks of stock in secret. This is exactly why sometimes a stock's price just feels off. The real game is being played somewhere else. All right, so how do we actually peek into these shadows? You need a system. You need a framework. The pros, they don't just stare at a price chart. They're connecting dots from all over the place. And the framework we're going to use is called PVTS. Think of it as a 4-step process that helps us piece together the whole story. Price, volume, time, and a final signal to get a complete picture of what's really going on. And the great thing about PVTS is that it's just logical. It's like being a detective. Step 1 is price and space. We find the scene of the crime, the key levels on the chart where the big battles are fought. Step 2 is volume and chips. We look for clues. We analyze the trading volume to see who's winning that battle, the buyers or the sellers. This is where we find those institutional footprints. Step 3 is time. We figure out the right moment to make our move. And finally, step 4, the signal. That's the trigger, the one final clue that tells us go. Okay, theory's over. Let's get our hands dirty and put this framework to the test. We're going to dive into HIMS, and it's the perfect example because on the surface, the chart is telling one story, a story of fear. But when you start digging, the hidden data might be telling a completely different story. And that disconnect, my friends, is where the biggest opportunities are often found. So step 1, price and space. Look at this chart. After that big nosedive, the selling just stops right here in this $15 to $16 range. See that? That's not an accident. That's what we call a value area. It's a line in the sand where buyers have shown up in the past and said, nope, not going any lower. The price is holding this level. That's our first big clue. We found our battleground. But just because a price holds a level doesn't mean the war is won, right? It could just be taking a breather before the next plunge. So how do we know if this is a real stand or just a fake out? We need to see who's actually doing the fighting. We need to look at the volume. The price tells us where the battle is, but the volume tells us who's showing up with the heavy artillery. And to see that, we've got to go to the dark pools. And here it is. This is the smoking gun, folks. This is the core of our whole investigation. Think about it. While the public is looking at that scary chart and panic selling, look at what's happening behind the curtain. On February 12th, bam, over 800,000 shares bought up in huge blocks. 5 days later, another massive buy, over 640,000 shares. Guys, your cousin with a Robinhood account isn't making these trades. This is institutional money. This is them quietly soaking up every single share the panic sellers are throwing at them, right in that key price zone we identified. Okay, so the plot thickens, right? We've got our price level holding, and we have proof the big guys are buying in secret. So now we move on to the next steps, time and signal. And for this, we're going to look at the options market. Now, why the options market? Because it's basically the world's biggest betting parlor for stocks. It tells us where people are placing their bets on where the stock is headed next. And this chart tells a fascinating story. Quick refresher. Calls are bets the stock goes up, puts are bets the stock goes down. And the key thing here is open interest. That's not just today's action, that's the total number of bets currently on the table. It shows you the real underlying conviction. And look at this difference. Way more calls, bullish bets, than puts. We're talking over 70,000 contracts betting on a rise versus about 42,000 betting on a fall. This lines up perfectly with the huge buying we just saw in the dark pools. All right, let's put it all together. Let's review the case file. Clue number 1, the price is holding firm at a key defensive level. Clue number 2, we have confirmed sightings of huge institutional buying in the dark pools. Clue number 3, the options market is loaded with bets that the price is going higher. All the evidence is pointing in one direction. It's time for the verdict. And the verdict is in. What we're seeing here looks like a classic case of bullish accumulation below 16 bucks. The story the data tells is that while the public was selling, the smart money was buying. Now, of course, nothing in the market is ever 100% guarantee, but when all the pieces of the puzzle fit together this cleanly, it strongly suggests that the sell-off was just a big head fake, an opportunity for institutions to load up. Okay, so that's the analysis. But analysis without action is just entertainment. So what do we do now? The final and most important step is to turn all this detective work into an actual, actionable trade idea, one with clear rules and a solid risk-to-reward setup. All right, here's the game plan. Our bias is obviously bullish, so we're looking to go long. An option strategy, like a long call or a bull call spread, would work well here. We'd aim for the $15 or $16 strike prices, getting in right where the big money was buying. And we'll give it plenty of time to work, something like a March 2026 expiration. Now the most crucial part, risk management. If the stock closes below $14, our theory is wrong, and we're out. Our first target for taking profits, that next wall of resistance up around $17.50 to $18. And just for one last piece of confirmation, we can actually look at what the market itself is thinking. These probability models, which are built right from the options prices, are showing a better than 50-50 shot that HIMS will be above our key level in the near future. So even the market's own odds are leaning in our favor. It's just one more little piece of data that gives us confidence in our thesis. So there you have it. We started with a chart that looked, frankly, terrible. And by using a pro-level framework to look beneath the surface, we found a completely different story. A story of institutional buying. And we built a solid, actionable plan around it. This kind of stuff happens every single day in the markets. The public sees one thing while the smart money does another. So the only question left is, now that you know what to look for, what are you going to uncover next?